Hello, everyone, and welcome to the second video of Real Day Trading. I know I said that Professor 1970 would be joining this time, but he had technical difficulties. We actually did record a session, but trust me, you don't want to see that. It's not pretty. So I'll be doing this one, and he will join soon once we figure out the charts and all of that. So let's get to it. Today, SPY decided it wanted to drop. And this morning, you see here, SPY starts off and you think, okay, here's a bid check, everything's fine, pops up, great, we've made a higher low, everything's going great, we're going to start heading off, and then bam. All right, we're going to test the 50 SMA here on the daily, which is right here, right? Tested, great, buyers are taking control, they're getting aggressive, here they go, they're jumping up. Screw you. Bam, back down again, test it again. Test it once, twice, 3 times, 4, 5, 6 times. And then finally, buyer said, screw it, done. And it drops like a rock. So I've been saying for a while that it was a little strange that we did not actually test the 100 SMA on the 10th, and that this looked a little bit like the late September pattern, which is we came down and then get back up again to the 50 SMA, and that was a head fake because a few days later it dropped and had a sustained drop below the 100 SMA before it came back up and then dropped again and then started going up. I remember this very well because it took a while actually to not have a bearish mindset after so many head fakes and then drops. This is not as severe yet, but we definitely have a head fake here and we're dropping down. At the moment, you have to have a bearish outlook on SPY until you're shown otherwise. Okay, so now we see what SPY did. Let's take a look at a stock today. Here is Caterpillar. Caterpillar didn't give a shit what SPY was doing today. Look at this. Goes up through its downward sloping trend line right here, right? I'm not even sure I'd call this an algo line because this high candle doesn't even have a lot of volume to it. You need a lot of volume in those candles for it to be an algo line, but it's still a downward sloping trend line. It's still significant. Breaks horizontal resistance and breaks through that trend line. Even as SPY was dropping, you could see here, CAT was just continuing upwards. So what did I do? I bought calls at the close on CAT. Wanted to do that? Well, one, I like to have a hedge against some of my short positions. So I wanted to have at least 1 or 2 good longs in there, just in case SPY decides to do a bounce tomorrow or range bound, stay and not continue dropping. I wanted to have a counter to some of the shorts I had. For example, I am short NVIDIA. I had a short today, Microsoft. And remember that one? Over here, and I posted about it and said Microsoft is trapped between its 2 SMAs, and when it finally makes the decision, one way or the other, be ready for it. I had alerts set here below the 100 SMA and set here above the 50. Well, today, the alert went off, and I had a bearish market. I had the alert going off saying that Microsoft is dropping. So I did a put debit spread on Microsoft. I believe it was $3.15 to $3.10 for like $1.31 or something like that, which gave me a $3.69 potential profit, which right around here, I pretty much collected all of that profit. I closed the put debit spread within 1 day with almost full profit on it. Why didn't I just take a put? Well, as you see, there were several times that Microsoft fell below this line and then popped back up. Also, it was unclear whether SPY was going to actually break through the 50 SMA or not. So not until it did, I couldn't just give a straight put because there was also a likelihood that SPY was going to bounce and come back up again. without breaking through the 50. Didn't wind up doing that, but that's why I covered myself with a put debit spread. So I've been talking to you all a lot about mindset, and it seems very clear that a lot of you are still not having profitable months. By the way, here's a general rule that will help all of you. If you are not a profitable trader, meaning you have not had 2 or more consecutive profitable months in a row, stop giving other traders advice. Just stop. Talk about your trades, go through them, but I see so many traders talking as if they're talking from a position of knowledge, of authority. And it's like, dude, you haven't had a profitable week, let alone month, and you're telling people how to trade? You all need to stop that. And that's number one. The second thing, there seems to be a rampant personality quirk, whatever you want to call it, this idea of the avoidance of loss. I get it. Nobody likes losing. And we certainly preach a high win rate all day long. Makes sense. But what you're doing is you're taking profits the moment you have them super fast. You just, you grab that win because you don't want to lose it. And you're letting these losers run because you don't want to take the loss. It's all loss avoidance. You're trading not to lose rather than trading to actually win. And that is a huge mindset difference in trading. By the way, also, I know there is a problem with the volume. I am staring at a brand new microphone that just got from, I think it's Hail Sound, and that will be hooked up. It's in its shock mount now. It will be put in. It's now into its Scarlett 8i6. I say this as if I know what the fuck any of these things are, but it's all plugged in, and soon I will be using that microphone to do these videos. So yes, I know, sound sucks. I got it. Hopefully you can hear me, see the subtitles, and that works. Also want to quickly cover scans. Okay, well, one, I like to use a lot of the scans here, which are an option stalker. There are some really great built-in scans like Pop Bull, which is a great scan for looking at potential swings. Right now, I would not really be swinging many bullish positions, but here's Pop Bear, right? So first one on the list, Google. All right, let's click on it. Look at this. Google is below its major SMAs here, right? Does not have earnings until February 1st, all the way down here. So right off the bat, just taking a quick glance at this, I know I'm going to look to probably do a put debit spread on Google tomorrow morning if the market opens down and Google has relative weakness. So I know that right off the bat. NVIDIA. I actually shorted NVIDIA. There it is. Look at that huge bearish engulfing candle. Now, yes, there might be some support here at the 100. But here's where, there's a difference between a hard and fast rule and playing something out in your head. I'm looking at this and thinking, okay, NVIDIA may have support at 260. I shorted this with a put debit spread. That's $5 away. All right, I'll take the $5, but what if it comes down, hits support, bounces up? Well, right off the bat, it gives me an exit point. I now know if it hits that support and support holds, I am going to take my profit and I'm out. If it breaks through that support, I might just buy back the short side of that put debit spread for a loss and let those long puts run. Because if it breaks through that 100 SMA, well, it's going to drop all the way down. It's got a long way to go before you reach the next level of support. NVIDIA has a long way to drop there. I might just let those puts run. So that trade gives me an exit and a plan at the same time. That is why I took it. And I took it right also at the close. I like to balance my portfolio, by the way. Some people don't, but I like to have a combination of bullish positions, bearish positions. But right now, obviously, it's a bearish market. So my bullish positions, things like CAT, which I'm talking about very strong, this is a fairly safe position for me to have. This industry is up, and it kept going up despite SPY. Might it to have some profit taking tomorrow if the market continues to drop, as futures seem to starting to indicate they might? Yeah, but it's not going to be as bad as anybody as stocks that did not have relative strength. Don't forget, what relative strength gives you is, one, a buffer. If the market starts to drop, the stock with relative strength doesn't mean it's not going to also drop. Doesn't mean it's going to keep having relative strength, but you have a little bit of a buffer there. Maybe it's 5 minutes, maybe it's 10 minutes. You have time there before it starts to drop like all the other stocks will drop. Why? Because there was some institutional support behind that ticker. That doesn't mean you can't have a stock that flips from relative strength to relative weakness and back and forth. It's supposed to flip. It's supposed to oscillate. You're using that as an edge. You're using that as a protection, that if the market goes up, it's going to go up even more. If it goes down, it will go down less than other stocks will. That is your buffer. It is not the only variable you use in determining what to trade, but it is a variable and an important variable that you use. Another type of search I like to do is, you can go here into Easy Scan, by the way. This is TC2000, but this is a type of searches. I love flex searches, which is, it has to be done in a time order. But let's say we're in a bearish market right now, right? So let's say I want stocks that have they start off with relative volume over 1.5, right? And they're going to also start off with their price over, let's say, 10. I don't want any cheap stocks, right? Okay. Now let's say this stock price, a new low over the last 50 days. Okay, there we go. And after it makes its new low, it then, let's say it has goes up. Let's say here, price. And let's say this price then moved above its 20-day moving average. And then it dropped back down and made even another low after that. I don't know if there's any stocks that qualify here. Well, let's see here. 50. There we go. Save. We'll call this bearish scan 1, right? Okay. And apply to scan results. Well, this is going to take for after hours, right? And let's select the date on the chart. Oh, I'm actually only a gold member, so there goes that. Real time. That was the first time I actually needed platinum services. Okay, so now I have this running. So tomorrow morning, this is going to give me all the stocks that will qualify based on that scan, right? That makes sense. Okay. Now, next, I have scans built in here, by the way. Some of these come from Dave Wise. Thank you, Dave. These are excellent scans. I use a combination of scans here, a combination of scans an option stalker. Essentially, I'm looking for stocks that A, have high relative volume, have good relative strength or relative weakness, and good or bad daily charts. Those are the top 3 variables right there. Once I find that, and like I said, Google, for example, this would be if I plotted it an HA reversal, right? So you can see it probably. There's a reversal candle, and tomorrow it could be a trend reversal down. That's why I'm going to be prepared to short Google tomorrow should market conditions warrant it. But I already have the plan set in my head. I did want to get to some more questions here, and let me see if I can grab one or two. Okay. Okay. How do you know when to trade stock or when to trade options? It's a good question. It really depends. Obviously, option liquidity comes into it. If you are looking to mitigate your risk and you want to use a spread, that matters. Your best bet is usually going to be a stock. Why? Because stocks don't have time decay. I can hold the stock. If I bought Ford right now at 25.30 in after hours, and tomorrow Ford opens and drops to 24.20, I can hold it. I can hold it for 6 months if I wanted to. I can hold it for as long as I want. You own the stock. It's not like Ford is never going to go back above 25.30 again. It's just a matter of how long you're willing to wait for it to happen and how much of your account did you dedicate to buying Ford. Because if you have a $10,000 account and you went ahead and bought 1,000 shares of Ford using your margin, well, okay, now you're kind of screwed. Now, if Ford drops, there's nothing you can do with your account until you get rid of that position, or at least get rid of half of that position. So you're putting yourself in a very bad situation. I keep getting asked about position size and what percent of your account should you use to trade. I don't know. I've never once, not one time, ever thought about the percent of my account that I allocate to a trade. Never once. Pointless. Why? Even when I was doing the 5K challenge, it didn't matter. I mean, how much? Oh, I had $3,000 left to make trades with. Okay, I see 2 trades I want. I can split it, 1,500 each. You're only risking as much as you're willing to risk on a trade in terms of your mental stop, your hard stop, where your spread is in terms of where it caps your loss. That's what you're risking. There's this, idea that if you spend $100,000 in a trade, you're risking $100,000. No, you're not. You're risking whatever you're willing to withstand. And stocks don't go down to zero. I mean, sometimes they do, but if you're picking a stock and it winds up going to zero, you're really picking shitty stocks. These are like low float garbage stocks. I did make a rare exception today, and I bought BBIG today. Here, you'll see BBIG. It was because I was seeing this volume on it, and I wanted to see. I bought it at 13.14, and it was pretty clear to me either it was going to break through, and this is a strategy that I do like to use. You buy something right under resistance, gives you a very clear stopping point there. Either it's going to break through or it's not. If it can't break through, I get out of the trade. if it does break through, I increase my position. It's a pretty yes or no, black or white, 1-0 thing there. So I did that with BBIG, and lo and behold, it shot up all the way up to, I think, 370, and I took profits right around 370 or so. I did grab some calls last minute on it for next week, simply because it does look like it might start to run. And if it does, that would be great. Great for everybody, or everybody who's in the trade. Okay. Let's see, other questions here. Please explain your stock selection process for the day in detail, from Miles JJCC. Okay. It's looking at scans all day. It's going through every chart and putting alerts on those charts. You know, if I'm currently in NVIDIA short right here, right, and I want to know if NVIDIA is going to break that line, so I have an alert there, right? If I go through my charts and I'm placing alerts on them, like here's a downward sloping trend line here for Google. Right now, Google is a short. However, it won't always be a short, right? Right. I'm going to go here. I'm going to set alert, just like that, and leave it. That probably won't be triggered for 3 to 4 weeks, maybe. But when it is, I will have a trade ready to go, just sitting there. So I have alerts put on charts all throughout, and all through the day, they pop up. Some of them I ignore because the market's not right, or I don't like the way the stock looks. But a lot of times I get trades straight from alerts. Other times I am looking at various stocks that are running through here. I like to also, let me see here if I can. I like to go to FinViz sometimes. You see, hold on. And it's always helpful to grab here. Okay. Well, there. Take a look at the market. You know, I'm just going to take a general look at it and see what areas and what sectors are working and not working. Obviously, tech, all red. This gives you a really quick, good visual representation, right? And it's always good to take a look at in the morning, afternoon, see the differences, see if it's changed. That is also what we were talking about yesterday with sectors. I know Option Stalker added a sector analysis here. If I go to list, I go to sectors, sector ETF, and click on it, say, okay, which one is, oh, the sector is down the most. Click on it, which stock in the sector, Marvel. Click on Marvel. Yep, there it is, dropping. Marvel is very weak. Look over here, a sustained downward pressure, selling pressure in Marvel. Marvel and NVIDIA tend to go hand in hand. So there you have a possible short. I wouldn't short Marvel because I'm already short NVIDIA, so I'm not going to duplicate the two. Okay. And finally, just back to this mindset thing. So many of you that aren't making money, I've said a million times, this takes time. It takes a long time. It takes years before you get consistently profitable. To expect that you're going to be profitable after a week or 2 weeks or 2 months or a year is not reasonable, which is why during that time, you shouldn't be trading with substantial amounts of money. You should be using very small positions as you learn. And having 1 or 2 good days in a row doesn't mean, oh, now I got it. Now I know how to trade. I can do this. And then you start upping your positions. No, you need to show that you can have month after month be consistently profitable. Could this be a job? Could this be something that you could turn into a business? Because if it can't, you should not be spending a lot of money trading. Don't get ahead of yourself. When I lost all that money in the beginning and screwed it up, I wouldn't trade with anything more than a share or a single contract until I knew I absolutely had it right again. So I see so many of you saying, oh, I've lost so much today and a terrible day. And you've been trading for 6 months. If you've been trading for 6 months, you should never have a terrible day. At most, you should have a, damn, I lost $20 today. That's it. So if you're losing a lot of money and you haven't been trading for a long extended period of time to perfect this, it's on you to not trade in a way that is going to be financially detrimental to you until you know how to trade correctly. All right. And how do you learn how to trade correctly? You can read the damn wiki. Everything's in there. So please read the wiki. It's on the Reddit. That way you will at least have the knowledge behind you, maybe not the mindset yet, but at least you'll have the knowledge. All right, that is it for today. I want to give a video out to you all, and I will see you soon.